Disclaimer, this is not financial advice. Always do your own due diligence before putting your money to work. With that out of the way, let's have some fun and enjoy the episode. What's going on, y'all? Welcome back to another episode of Rich Off Gains podcast. This is episode 36. It's your boy CB checking back in with you all. Happy Mondays. I hope you all had a great weekend. I hope you all had a great start to your week on this beautiful, beautiful Monday. Without further ado, let's get right to it. But before we get started, you know I gotta say a few words. Man, it's important that you apply yourself as much as you can to do the things that you have on your heart to do. Don't get easily distracted by other people's intentions on what they want you to do, on society's expectations of what they want you to do, who they want you to be. Don't allow anything to derail you from the thing that you're trying to pursue. Apply yourself at all times. Be sharp-minded, focus on the thing that you have dead set on what you want to accomplish, and focus on that. Have a tunnel vision, execute with high velocity, high conviction, and just see it through no matter what. No matter how long it takes, no matter how many people don't doubt you, no matter how many people don't believe in the thing that you're trying to do, filter all the noise and focus in on the thing that matters, no matter what. So today I want to talk to you about 5 different ways that you can gain attention. Starting out with number 1, we have solving a real problem. Most times when you're making content, and I know I fell in this loophole of making content, but the content that I was making this last 6 months wasn't solving a real problem. In my mind, it was solving my problem, what I thought I needed to do in regards to being consistent and showing up and making the content. But what I come to realize is the content that was doing better was the content that was solving problems. So when I'm making content around the market and around market predictions and what I think the market could possibly do the next day, that helps people solve their problem of what to look for going into the next day in the market. But when I was making videos around motivation and speaking positivity and uplifting people, I wasn't really solving anyone's problems with that, at least from what the viewers were showing me on the amount of attention I was getting from those videos. You see what I'm saying? So understanding what your audience needs to see in order for a problem to be solved, and enough people to view it to gauge and understand that you're solving someone's problem, because the more viewers you have associated with the video just equates to the amount of people's problems you're solving. So asking yourself, how and what can I do? What kind of content do I need to make to solve my audience's problem? What is my audience's problem? What are they dealing with right now that they're struggling with, or something that they need me to provide a solution for? This can be for entertainment purposes, this can be for educational purposes, this can be for inspirational purposes, this can be so many different things. It's just understanding who your avatar is and how you can best benefit your avatar, your viewer, that fits you. So for me, being an investor, I came to the conclusion that, okay, I need to make more content associated with helping my avatar and my viewer understand what's going on in the market, understand what investments are good investments, what investments are bad investments, doing more videos related to the market and what is helping them get the better edge in the market. So having a solution will help you gain more attention on your content. The second thing you can do to gain more attention for your brand, for your business, for your content, is to just be different, to be yourself. And being yourself is great because there's only one you. There's only one you. There's only one version of who you are. So being different is simply just, to me, being yourself and being the most organic version of yourself, not being someone else and trying to perceive and take on a persona of someone else's lifestyle or way of living when that's not who you are. That's not your reality. That's not the way you live. Yeah, that might be cool. That might seem like the way to go and the route to take in content. You can be anybody and everybody at the same time. and still get a lot of views and a lot of attention on your videos just from simply being the most down-to-earth person. You can be the most expeditiously outstanding person when it comes to making content, like you're doing the utmost craziest content, trying to jump off planes and go skydiving and do all these adventurous things. You can be the most basic person who's just reading a book and get a lot of views from it. It doesn't matter what kind of character traits you have, as long as you're yourself and you're comfortable being who you are on the camera. That's all that matters, because that perception of you being who you are on the camera, if it's something worth watching and has attention worth gaining, it'll be pursued after, people will watch it, just simply due to the fact of you being who you are. But you trying to be someone else and be different on the camera, and it not looking organic or looking natural, isn't going to allow the viewer to connect with you on a certain level that allows them to want to be drawn into you as a person. So you gotta be yourself, but also find a way to be different while being yourself. But essentially, to me, that's just being yourself, because you are who you are, and there's no other version of you in this world. So just be different by being yourself. And think about your brand. When you're making the content and being different, think about how your brand so aligns with who you are, and wrap your brand's content around you. Make the content around you for your brand. So the brand is you as the person. You're the embodiment of the brand. So you just have to align your ideas and what you want the brand to look like and be perceived as within yourself, and deliver that story and deliver those moments and experiences on content, on the videos you're making, on the videos you're posting. That way, the audience that you're seeking to grab is drawn into your brand. But you gotta be different. The third thing you can do to obtain and attain people's attention is just simply establishing value. So similar to number one, talking about solving the problem, now you have to establish what that value is to continuously solve that problem, continuously have that viewer come back video after video because of the value that you're adding to that person's life just by simply watching your content, right? So if you're an entertainer and you're funny, they wanna laugh. So they're coming to you. The value that they get from watching your videos is that you make them laugh. So they want you to continue to make them laugh. And so you just have to be, you as the content creator have to think in the box of the viewer, like, okay, what am I doing that's funny? You know, what am I doing that's helping the viewer want to watch this video? What am I doing as the educator that's helping the viewer want to continue to watch this video? What insightful information am I giving that's helping the viewer want to continue to watch this video, right? So you're thinking about how to package yourself, not only being different, but also adding value to continuously have the consumer, the viewer, come back time and time and time again. So you have to do your due diligence, understanding what are the ticks in the video that make the viewer continue to watch the video. You know, like there's different analytics on a YouTube short that you can see the watch time somebody's watching your videos, how long they stay on the video, how many views you get, of course, and just the overall in-depth analytics of your videos. That gives you so much insight in itself, because you're knowing where and what moments of the video allow the viewer to stay longer and really watch the video through and through. You're knowing where the fall off point is at. You're knowing where the disconnect happens. That helps you so much, because that information now gives you insight on what you need to improve on. Once you improve on the thing, that now can help increase your viewership and how long people watch your video, the duration of the video being longer, how long people watch it, right? So you have to be mindful of, how am I adding value? How do I continue to add value? Where do I lose the viewer in adding value to know how to move forward? Before, we have being consistent. Trust builds influence. The more you show up and the more the consumer, the viewer sees you more and more and more, it builds influence around your brand and confidence that they can go to you, you're reliable, you're someone that they can go to watch and get the value that they want from. You can't stop showing up when things get tough. That's when you need to show up the most. That's when you need to be the most consistent, because how do you know it's not tough for your viewer? How do you know it's not tough for your audience, the thing that you're dealing with as well? You know, you gotta still show up for those people, especially, you gotta be, like, being a brand, being a company, like, look at all the major companies in the world. You think that if the owner had one bad day, they just stop showing up. Look at Walmart. If Walmart CEO, I believe his name's Tim Walton, just stopped showing up one day. And this is a 24-hour grocery store, convenience store that everybody goes to shop, get their groceries from, et cetera, et cetera. Stop showing up one day just because he had a bad day. That people want to still go to Walmart and show up? Absolutely not. They would stop shopping there and go find somewhere else to shop, somewhere more reliable store, somewhere that's still showing up consistently even on their worst days. Because that shows resolve, and that shows confidence and confidence in the thing and in the brand that they're putting money in. You don't want to show up for someone who's not willing to show up for you on their worst day. You want to show up for somebody who's willing to show up for you on their worst day, their best day, their most mellow day, any day of the week, rain, sleet, snow, as much as they can. And that just helps build confidence. So you gotta be consistent, and you gotta stay consistent, especially when things are difficult and things are not working out for you as the business owner, you as the individual, because it's not just about you. It's no longer about you when you start providing a service to other people. When you're trying to provide something to someone who you want value from, or you want to provide value to get value from, you gotta be willing to make sacrifices and put away your emotions and your feelings about whatever it is you're dealing with long enough for that person to gain value from you. The last thing you can do to attain more attention and continue to retain attention is to tell more stories. Share stories on your journey. Share stories on your memories and moments that you remember along your process to help the viewer better connect with you. Telling a story rather than explaining an example of something is better, because it just helps to strengthen the connection between the viewer and you as the owner or the business. So having stories around the lessons, having stories that you can tell around the joke, having stories that you can tell around the inspirational, motivational speech, help the viewer grow closer to supporting your brand, believing in your brand, following your work, and just supporting overall everything that you do. But you gotta be a good storyteller, because that will help you unlock a new level of attention by telling a good story. All in all, earning your attention by being useful and being a very resourceful person who is a good storyteller, who's able to be consistent, who's able to provide value and give people the solutions to their problems. And that's it. Do those things, and I promise you, you will gain and obtain more attention from your viewers, and you will gain more views from your videos. Today's investment tip of the week. If you guys want more tips and tricks about day trading and investing, make sure to click the link in the bio, www.continuebelieve.com. I share a lot of free resources and tools, tips and tricks about how to day trade, how to get started investing, and so much more. So make sure you guys check out the link in the bio. Thank you guys so much. Make sure to leave a like and follow. And yeah, see you guys later. Understand cash flow. Understand the company you're invested in. Where's their money going? What's their net income? How much money are they keeping after all the expenses are accounted for? Right? Because a lot of times investors tend to, retail investors, I won't say institutional investors, but retail investors tend to forget that these stocks we're buying, these companies we're trading, these day trades, options, everything we're doing, they're companies at the end of the day. They have real operations and real systems that they use to generate money. So if you're investing into something long term, you don't want to invest into something that you don't understand the cash flow statements from. You want to invest into something that you understand the cash flow statements, you see what you want to see from the cash flow statements, and you're confident in the company doing well. The way you gain that confidence is by looking at the cash flow statements. You see their income balance, cash reserves, if they use dividends, you see how much they're paying in dividends. You see their expense ratio, how much they're spending. You see their gross sales, their net income after everything is said and done, all the cost of goods sold are accounted for. They now show you the value that's had after the fact. And then you can even see what they're using the money for and how they're investing the money. If they make other investments, you can see where they're investing the money. Understanding cash flow is so important for you as an investor because it helps save you from making the wrong investment. If you just simply look at a cash flow statement and see that a cash flow statement is negative, you know that that's not a good investment because, or it might not just be a good investment at the time because it's not generating profit. But if you see a company that is generating profit, now you want to compare that company to another company that's in the same space doing the same thing to see which profit margin is better. Who has a better return on their investment? Is NVIDIA a better investment, or is Avgo, Broadcom a better investment? Are they making more money or less money? Who's making more money? We know who's the most valuable, but who could Avgo or Broadcom break above the value of NVIDIA? Who knows? This depends on understanding cash flow, understanding the value of the business, why the business is more valuable, why more people are buying products from this company instead of that company, whatever. Understanding the cash flow is where it starts. Knowing how much money they have coming in and going out is important. So understand how to read cash flow. That's your investment tip of the week. So today oil saw a rise above 8% after Trump re-announced the opening of the Strait, the closing of the Strait and the opening of the blockade for the Strait, after reissuing battle, I guess you could say, with Iran and the war in Iran over the oil in the Strait of Hormuz. So what does that mean for you as an investor? That means that you can possibly look to take more oil trades if you want, look to capture some oil moves to the upside, seeing that we had a pretty big run up this today. Could it continue to run? I believe it can if we don't resolve the war situation once more. Granted, we have pulled back below that $100 range, seeing an all-time high, I think back in May around 117. Hopefully we don't get anywhere close to that again. I would like to see it continue to stay down, but to the powers that be, that's their decision on what they want to do and how they want to go about conflict. So ideally we stay below 100, but I can see a pushback higher, closer to $90 if possible, if we're going to continue to have the war that we're having, because oil reserves are already depleted for a lot of countries. I know for America at least, oil reserves are not what they were before the war, and would be even worse off after the war, depending upon when it ends. So hopefully we come to a conclusion sooner than later, because if not, it's going to be very, very ugly for us on the flip side of everything. After everything's said and done, and we're going into midterms, we start to account for the reserves of oil that we're missing, and we just start to see that there's not enough. So that would be my only concern about oil and the valuation of oil. But other than that, definitely look to trade it. I mean, it's very volatile right now. Oil does not move the way it's been moving normally. So it's pretty crazy to see it moving this way. But, hopefully Trump just comes to a resolution with Iran, the U.S. is able to come to a resolution with Iran. I'm not saying the U.S. I'm pretty much really saying Trump, because he's the one that's voicing and verbalizing all the issues with Iran. So I'm not in that position to make those decisions, but all we can do is capitalize off the opportunities we see in the market. So that's what we're here for. Netflix, is it a good buy? Netflix has earnings reports this week going into Thursday. The options market expects a 7% return or move, I should say, in Netflix this week. I think that 7% is to the upside. I also think that Netflix is due for upside movement. We had that initial move that we had back in May, going back into the 110 range, and then once we reported earnings, actually I believe it was April. Yeah, I believe it was April, we saw it push into 110, and then after reporting earnings, we then saw a pullback from there, going all the way down back to 70, initially 80, then failing 80, going down lower, going down to $70 now. From 70, we have seen a bit of a reversal pushing back up, and now we're sitting in between 70 to $77. So I do think that Netflix is primed to go. It's just a matter of interest. Are buyers interested in buying Netflix? You know, there's a lot of other investments taking place. We have healthcare companies going in, people putting money in. We have, I believe people are trying to offload their tech companies, especially semiconductors and memory companies, and reposition themselves in other investments. So I think Netflix is one of those investments, Microsoft being another one, and SK Hynix not being one. Should you buy SK Hynix due to its recent IPO back on Friday? I don't think so. I think it's too soon. I think it's too soon to be buying SK Hynix. Same thing with SpaceX. We're seeing a lot of pullback with SpaceX today. It reached below the initial price that it was at when it came on the market. Well, not the initial public offering price, but the initial level that it opened at, which was $150. I believe we closed below it. Let me double check. Where are we at currently on SpaceX? Currently, SpaceX is sitting at $139, which is now below that 150 level that we initially opened at. So our opening price was $135, I believe, on the SpaceX name. So we're only $4 away from reaching that price. And I wouldn't be surprised if we hit it and go below it. So that being said, I don't believe you should buy SK Hynix because it's currently down as well. I'm not sure what the initial public offering price was, but it's definitely not worth getting in at this price. We want to see it cool off a little bit, let it settle on the market, settle down, let buyers do what they do, let investors do what they do, hedge funds do what they do, let everyone do what they need to do first to understand the value behind SK Hynix. I think that it is still valuable. It's another memory company, so great memory investment. It's just overseas. I believe it's in Taiwan, based in Taiwan, but they're trying to merge over into the U.S. And so I definitely believe that SK Hynix is another good memory investment. It's just a matter of timing it as far as getting into the position. That's why it's important to understand everything's about timing. Having the right time in the market whenever you're getting invested is important, because your positioning on when you buy dictates your return on your investment. If you buy at the highs of the S&P 500, for example, where it's currently at, you're buying at $700 a share, and somebody else bought at $500 a share, they might be wanting to take profit at $700 a share. Meanwhile, you're in at $700 a share, so whenever they take a profit, now the value of the share is going back down. So now the value goes from $700 to $750. Your entry price at $700 is now worth $650. So now you're down $50. Meanwhile, the person that bought at $500 is up $200 and took profit. So he's up $200. So it's important that you understand the timing of when you get in and out of these positions, because that really determines how you make money in the market. Your timing of your entries and exits are the most important thing you can do in the market. So just be mindful of that, and that's why buying SK Hynix or SpaceX are not good investments currently. But a few names that are worth watching going forward whenever it comes to IPOs. Of course, we have the two big ones, ChatGPT and Anthropic. I believe one of the two decided to push their IPO back into mid to early 2027. I want to lean towards it being ChatGPT that said that, OpenAI, but I'm not entirely sure. Because I believe Anthropic is possibly going to go public at the end of this year, and so from there they'll go public, and then after they go public, ChatGPT, OpenAI will go public after that. Other companies IPO on this year that are worth watching are going to be Chime and Klarna. Both fintech, which I like. SoFi already on the market, having its success that it's having. I think that those will be good investments to look at on IPO as well. Outside of Anthropic and OpenAI, so those are going to be a few companies that I think you guys should keep an eye out for. SK Hynix, let it cool off. SpaceX, let it cool off. Don't force it. Just wait. There's no rush to the top, because SpaceX is already overvalued as is, and SK Hynix, I'm not sure whether it is or is not overvalued, but I definitely know that it's just too soon to go into. Give it about 3 to 6 months, and then from there, you guys can decide whether you want to buy it or not. With that being said, this concludes the episode 36 of the Rich Off Games podcast. It's your boy CB checking back in with you all. I want to thank God for another day that was not promised, allowing me to create these videos, make this content for you all to hopefully soak up some games, some knowledge. I hope I was able to provide some form of value to you guys. If you did, make sure to leave a comment, show some love and support however you can. It's your boy CB checking back in with you all. I'll see you guys same time, same place next week. God bless.